What is going on, everyone? My name is John, and Cathie Wood just announced some big news on Monday about Tesla. What is it, and how can we profit from it? If you're new to investing, Cathie Wood is one of the most well-known investors today and runs Ark Investment Group. With her bold predictions on stocks like Tesla, she has taken center stage as one of the leading investors on Wall Street. Her actively managed funds have returned an astonishing 106%, 108%, 152%, 157%, and 180% respectively in 2020. So you can say that she has burst onto the scene quite rapidly. But what she is really known for are her huge price targets that she has given on stocks like Tesla. And on Monday, Wood said that she would be announcing a new price target in the coming weeks, and the price will be much higher. So let's dive into that right now. On Monday, while on Bloomberg, Wood was asked about her new price target, and this is what she said.
Now, you've said you're going to put out a new Tesla price target. The market is anxiously waiting for that. When are we going to see that? Can you give us an idea of what the target will be?
It's going to be I'm going to say a couple of weeks. We're getting compliance is helping us cross our T's, dot our I's, and do everything we should do before we send it out. But the two things that have happened to Tesla since our last projections are, one, it has increased its market share. When we put out our original $4,000 price target, so the equivalent of $800 now, we thought that Tesla's share would drop from 17%, this is share of the electric vehicle market, global electric vehicle market, from 17% then to 11%. Instead, its share increased as others with wonderful brand names started increasing the number of electric vehicles in their companies. So that was a big wake up. In the United States, I think Tesla, through the third quarter at least, was still 80% of all electric vehicles sold in the United States. So pretty stunning. The second thing that has happened is autonomous. The probability that Tesla gets autonomous right, we believe has increased from the 30% that we had in our base case in our last model. What's interesting about autonomous is the margins in autonomous, the gross margins are in the 80% range. The margins for electric vehicles alone are in the 25 to 30% range. This is a 5-year projection. So the model changes completely if Tesla gets autonomous right, and we think it will.
Okay.
With Cathie Wood announcing a new price target, it really has Wall Street buzzing and really trying to guess what this new price target will be as she continues to buy the dip on Tesla seemingly every day. So let's unpack what Cathie Wood is talking about within this interview. She gave two huge reasons why she's even more bullish on Tesla than she was when she gave her original price target of $4,000 a share, which at an adjusted split basis would be around $800 a share, which it's already hit before. When she gave this original price target a few years back, people thought she was crazy. Well, who's crazy now? Here are a few things that Wood discussed. First, when she had originally put the price target out, Ark was under the impression that Tesla would see a decline in total EV market share globally, which makes sense because as more and more competition begins to roll out from other companies as well as countries like Volkswagen, NIO, XPeng, and others, logically, many would believe that the market share would drop from 17%, which is what they had before, to around 11% of the total EV market globally. Well, instead, Tesla did the complete opposite, growing their market share to about 20% of the total market. Tesla's sales in China last year more than doubled to $6.66 billion, making up about a fifth of the total car sales that Tesla had in 2020. This is a far stretch from the 12% that China made up for Tesla just a year prior, showing that Tesla continues to diversify their income to allow them to expand into more markets and products with things like the Tesla Semi, Cybertruck, and others to continue to grow market share into the future. With the majority of their sales coming from the US, and them having an overwhelming 80% of the total US EV market, it is clear that they will continue to dominate the US market for years to come. Although Tesla does not have as much of a stronghold on the European market, they continue to invest heavily there as well, as it is currently one of the largest EV markets in the entire world. With Tesla investing so heavily in both the European as well as the Chinese markets, I don't see their market share slowing much in the near future, especially with a cheaper model coming out in about 3 years or so, according to Elon Musk, which could be at a reported $25,000 price target, which would be huge for Tesla. And China wants to have 25% of new car sales be electric by 2025, which once again would be huge for Tesla and the EV market in just the next 5 years. Cathie Wood also discussed that her conviction in Tesla's full autonomy is rising because she feels they are getting closer to having it to consumers much sooner than expected, which would drastically increase price long term. And Wood is quoted saying that margins on autonomous would be in the 80% range, while normal EVs are around 25 to 30%. One thing that she didn't mention is if Tesla does manage to get autonomy correct, they could also license out that software to have another source of revenue. Although self-driving may be a little bit away, Wood believes that it may be closer than we think, which would be amazing for investors and increase price in the short and long term. If you're a Tesla investor for the long term, there are really a few different aspects that you're betting on. One, and most importantly, being the autonomous vehicle. As Wood said, if they can pull this off, margins could increase to as much as 80%, which would allow Tesla to just invest more money into future technologies as well. Second, being the ever-growing EV market and having Tesla continue to dominate that as well. And third is the reduction in battery costs long term. For Tesla to begin making cars for the masses, battery costs need to drastically decrease to allow for access for Tesla for more and more people. Now, I know there are a variety of other things that are important to the longevity of Tesla, but if Elon can execute on autonomous and continue to hold market share, as Cathie Wood said, price will just continue to rise. Thank you all so much for watching today. If you enjoyed, please make sure to drop a like on the video and to subscribe for more content. Once again, thank you so much, and I'll see you in the next video.